Exactly.
And I think that brings us really neatly to Liquify,
Yeah,
because obviously this is a very different kind of play, right?
definitely.
So you said that you'd already started thinking, I think smartly,
Yeah,
if you want to build something really big, you've got to look at where
yeah,
your expertise sits, because people are going to back you firstly for your
absolutely.
expertise.
Absolutely.
And so where and when did the idea come from in this mix? Like you're thinking about, I think I
Yeah.
want to build something bigger. Talk us through the beginning.
So I did my MBA at Imperial. And when I went to Imperial, I had a business idea in my mind, which was a fashion marketplace for the African market, for designers and brands in the African market to get access to sort of new customers in Europe and what have you, hopefully to solve sort of some of the logistical nightmares when it comes to shipping and what have you. So I went into Imperial, my MBA, looking to explore that. So I did a couple of pitches with that idea. I actually did my entrepreneur course journey that in mind. And then I went into a accelerator program. And when I went with the idea, but then I had been working on the idea for about a year or so. And I met my co-founder, now co-founder at the same accelerator, and exchanging the ideas of what we're working. And I definitely want to stay within the, emerging markets, specifically Africa. And I was like, okay, I've been working on this for a year. Honestly, I think investors wouldn't invest in me with a fashion platform, honestly.
Mm.
And she shared with me this idea of Liquify that she had been working on because she worked in trade finance at Citi, and I also worked in corporate banking. So she mentioned the idea to me that she had 2 years prior.
And can you just tell us, like, at what stage,
Yeah,
what idea is it at this stage? Because I'm curious to come back to,
yeah.
like, has it changed? Was it as it is now?
So she had the idea of Liquify 2 years ago when she was in trade finance at Citi, where she saw that a lot of the SME clients that were looking for sort of financing were not able to obviously get access to the financing that they wanted. So she had the idea that, oh, wow, if this is happening in Asia, it would probably be the same in Africa. So when she spoke to me about the idea, I was like, oh, that's very interesting because I'd also been in the SME space, investing in SMEs in Africa. And I knew the problem and
Mhm.
it just fit. I just understood who the customers were. I understood the problem. And when we spoke, we just clicked. And then we thought, okay, well, let's do this. Like, let's work on this together. So yeah, that's where we came together. And basically Liquify is an invoice marketplace that connects exporters in the emerging markets to working capital financing. So anyway, we've been working on it for about a year or over a year. And that's kind of how we've come together.
Love it. And for anyone who doesn't know
Yeah,
anything about invoice
sure.
finance, working capital finance,
Yeah.
can you just explain that a little bit more for them?
Sure. So in Africa, access to debt is extremely difficult, especially if you're an SME. One is very expensive. If you look at places like Ghana or Nigeria, it could be 26% plus, yeah. 40%, actually, a lot of them I've heard. Here, we can't even think about that, having to pay 40% on a loan. So, and then there's obviously requirements like collateral, and some don't have the collateral to actually meet those banking requirements. Then, of course, the banks also have their own internal sort of risk models that they have to also adhere to. As a result, they won't service the needs of some SME clients because they'll deem them as risky. And there's not a lot of alternative funding arrangements available for those SMEs. So essentially, what we are focusing on is we're trying to drive liquidity into the emerging markets. And we think the best way to do that is through trade finance. Because if you think about it, you're focusing on businesses that are trading with maybe multinationals themselves. So what happens usually is that for SMEs that are exporters, maybe there'll be like 30 days that they'll have for the payments back,
And
right?
30 days for
30,
multinationals is actually quite short, right?
yeah, yeah. It could be 60 days, it could be 75 days, right? And also if you're an SME, sometimes you might not have the bargaining power to reduce that, right?
Mhm.
So that means that within those days that you're waiting for your money back, it's very difficult for you to probably pay your suppliers or you're using your cash flows to pay your suppliers, right? So what we're doing is we're working with exporters or we're supporting exporters that are trading with multinationals. We're giving them financing when the goods are on the ship. And then upon maturity, their buyer would pay us back. So therefore, they can pay their suppliers quicker. They could basically pay other parts of the operations much quicker when we kind of reduce their working capital cycle. Yeah, and hopefully that would help spur economic growth because then they're paying their farmers or if they're in agriculture much quicker. And yeah, so that's where sort of the idea, that's what we're trying to do, really kind of drive liquidity in the markets and help businesses grow at scale.
So you have this idea. You obviously both have deep expertise in the
Yeah,
space, but how do you even get started with
yeah,
this kind of fintech? What were some of the things you thought we need to test this first?
Yeah.
And how did you go about testing some of those really early risks?
Yeah, sure. So the main thing is, of course, sometimes when you say Africa, everyone's like, that is so risky, right? Because they don't understand the market. And even like maybe a mid small, maybe SME or the mid corporate here that is also working with maybe African suppliers, they will probably struggle to get financing. As long as you mention Africa, there's a risk perception. So that means that your go-to-market has to be quite strong. So that means that you really need to assess the kind of businesses that you would be lending to, who they're trading with, right? So our requirement is that the business has to be trading with a multinational and not just any, maybe a really small player in the UK, because that means that if you're trading with like a Tesco, that means it's obviously robust. Tesco will pay back on the when it's due. Also, we're dealing with SMEs that have trading relationships that exist for like 1+ years.
Okay.
So therefore, our initial criteria reduces that risk. And also we're focusing on post-shipment financing. So that means that the risk is now moved from the SME to the buyer, which is the large corporate. So we're essentially de-risking the investment by focusing on by focusing on exporters that are shipping with multinationals where the goods are on the ship. And that's where we get the financing. Because if we did it before, that means we have to rely on the SME's cash flows, and that's be tough.
Yeah, really risky.
Yeah.
And so was that to me
Yeah.
sounds like a lot of thought has gone into where to your point, your go-to-market strategy.
Absolutely.
Was this like the first idea?
Yeah.
I want to get a sense of, as co-founders,
Yep.
when you were like, you've come together on
Yeah.
this accelerator, you've identified
Yeah.
this space, you're kind of going, oh, actually, I think we want to work together.
Yeah.
What were some of the things that you had to do as a co-founding pair first to get this off the ground?
Yeah, sure. I think one, you have to really understand where your skill sets lie as well, and really leverage those skill sets. So my co-founder she's from consulting as well, so she's also very detailed and she's good at go-to-market strategies as well. So that's really good when it comes to, okay, well, how are we going to get started? Like, where are we going to go? I've also worked within the SME space in Africa. So when it comes to outreach to SMEs and also maybe groups that would give us access to SMEs, it's easy to also go through that. So I think you have to really rely on your strengths. And I think that's where now you're like, okay, that's why investors want the founders to come from to be from an area where they have domain expertise. Because when it comes to go to market, you have to be able to use your existing networks to really kind of get going. So that's really relying on our expertise and trying our best to kind of figure out, okay, what do we have and how can we leverage that to get to the next steps? Yeah.
And so what have been some of the hardest things about setting up this business specifically? Some of the big learnings along the way?
Africa has so many opportunities, but there's also quite a bit of risk as well, in the sense of sometimes there's a bit more education involved in explaining maybe the product with SMEs, because if you think about it, because of the history or what have you, sometimes people are don't trust maybe new players that might come and say, we want to offer you this, because it's like, what do you want in return? So I think definitely when you're focusing on emerging markets, you need to understand the culture, right? You need to also just understand how that could potentially impact time and doing things, and explain to people how this would work or how it will impact their business, because they deal with things in a different way than we would in the UK. So that's definitely something that we're obviously always learning as well. Also, part of our go-to-market also has included getting involved with, for example, some government organizations. And I would say that sometimes when there's like a change of power or what have you, sometimes the people change. So also when you're following up or when you're engaging with people, it can be quite difficult, because the person you were engaging with before might not be there. So it's quite tough there. But it's such a rewarding place though to do business. Like there's so much there's so much opportunity. There's so many exciting things to do. And I think that's why whilst we're doing this, I'm just like, oh my goodness, like if people really knew it's such a gold mine, there's so much opportunities, there's so many ways to support. And also, I think another thing people have to understand is, while there is education involved, don't assume that you're just going to tell people what to do. I think sometimes when people go into Africa, they probably feel like, oh, I'm going to help these people. No, people know what
mentality.
Exactly. People know what they're doing. It just has to work right when they need it. Just because you'll come to give them financing doesn't mean that they have to jump at every opportunity. It requires a bit of understanding them and their business. So yeah.
And to your point, it's like about adapting to the way that they do business, not
Absolutely.
trying to push on your way of doing business.
Absolutely. Absolutely. And I think that's probably the biggest learning, actually.
Mm.
Yeah, I think we even spoke about it this morning.